The stock market is full of opportunities, but choosing the right investments can be challenging, especially in today's volatile economy. With rising interest rates, inflation concerns, and technological disruptions, investors need to be strategic but marked about where they put their money. That's why in this video, we'll cover some of the best stocks to buy right now. What he cost for stocks, maximum long-term profit. These companies have basic, strong financials, industry dominance, and future growth potential. Whether you're looking for high-growth stocks or stable, dividend-paying investments, this list has something for you. We'll break down each company's business model, revenue streams, and key risks, so you can make informed decisions and build a winning portfolio. If you want to maximize your investment returns and stay ahead of market trends, keep watching, because by the end of this video, you'll have a well-researched list of top stocks and how to consider adding to your portfolio. Segment 1. Stock pick number 1, Apple. One of the strongest long-term investments in the market is Apple, AAPL. While Apple is best known for its iPhones, it's much more than just a smartphone company. Apple's ecosystem of products and services, including Macs, iPads, Apple Watch, AirPods, and Apple services, creates a loyal customer base and recurring revenue streams. One of Apple's biggest strengths is its services division, which includes the App Store, iCloud, Apple Music, and Apple Pay. This segment has higher profit margins than hardware sales and is growing at a rapid pace. Apple is also pushing into artificial intelligence and augmented reality. The recent launch of the Apple Vision Pro headset marks its entry into the mixed reality space, which could be a major growth driver in the coming years. Financially, Apple is a powerhouse. The company generates hundreds of billions in revenue, has one of the largest cash reserves in the world, and consistently delivers strong earnings and dividend payouts. The main risk for Apple is its dependence on iPhone sales. While Apple is diversifying, the iPhone still accounts for a large portion of its revenue. If smartphone demand slows, Apple's growth could be impacted. That said, Apple's brand strength, customer loyalty, and expansion into new markets make it one of the best stocks to buy for long-term investors. Segment 2. Stock pick number 2, Meta. Next on the list is Meta, the company behind Facebook, Instagram, WhatsApp, and the Metaverse initiative. Despite facing regulatory scrutiny and competition, Meta has successfully reinvented itself by embracing artificial intelligence and improving its advertising algorithms. One of the biggest growth drivers for Meta is its advertising business. With billions of active users across its platforms, Meta is a dominant force in digital advertising, and AI-powered ad targeting has significantly boosted ad revenue. Meta is also making massive investments in the metaverse through its Reality Labs division. While this sector is still in its early stages, if Meta successfully builds a profitable, virtual and augmented reality ecosystem, it could open up new revenue streams in gaming, e-commerce, and digital experiences. Financially, Meta has rebounded strongly from its stock price decline in 2022. Cutting costs and improving efficiency, it now boasts strong profit margins, a growing user base, and innovative AI-driven technology. However, investors should be aware of regulatory risks, as governments worldwide continue to scrutinize social media companies over data privacy and misinformation. Overall, Meta remains a high-growth stock, with strong revenue potential and a leading position in the digital economy. Segment 3, stock pick number 3, Amazon. Another powerhouse stock to consider is Amazon AMZN. While Amazon started as an e-commerce company, it has evolved into a technology and cloud computing giant. One of Amazon's biggest growth drivers is Amazon Web Services, AWS, its cloud computing division. AWS is a market leader in cloud infrastructure, powering businesses, websites, and AI applications across the globe. Even though Amazon's e-commerce segment is facing massive macroeconomic challenges, it continues to dominate online retail and expand into high-margin areas like advertising, logistics, and subscription services. Amazon Prime, with its streaming service, exclusive deals, and fast shipping, has created a sticky customer base, ensuring recurring revenue. Amazon is also investing heavily in AI to improve efficiency in your warehouses, logistics, and voice assistants in warehouse like Alexa. These innovations will help Amazon to cut costs and improve margins as forward in the future. Risks for Amazon include regulatory scrutiny, increased competition, and potential consumer spending slowdowns, due to economic uncertainty. However, given its dominance in cloud computing, e-commerce, and digital advertising, Amazon remains a top stock for long-term investors. Segment 4. Stock pick number 4. Berkshire Hathaway. For investors who prefer a more stable, diversified investment, Berkshire Hathaway, BRK.B, is an excellent choice, led by legendary investor Warren Buffett. Berkshire Hathaway is a conglomerate that owns a diverse portfolio of businesses incremental-wise across multiple industries. Berkshire's holdings include major stakes in companies like Apple, Coca-Cola, Bank of America, and American Express, as well as fully owned businesses like Geico, BNSF Railway, and Dairy Queen. One of Berkshire's biggest strengths is its ability to generate consistent profits, even during market downturns. The company's insurance business provides steady cash flow, which Buffett uses to invest in high-quality stocks and private businesses. Berkshire also benefits from holding strong value stocks, which tend to outperform during economic uncertainty. The main downside to Berkshire is that it doesn't offer high growth like tech stocks. However, for investors looking for stability, diversification, and long-term value, Berkshire Hathaway is a strong, low-risk investment. Segment 5. Stock pick number 5. NextEra Energy. Finally, for those interested in renewable energy, NextEra Energy, NEE, is one of the best stocks to buy. NextEra is the largest producer of wind and solar energy in the world, and it's leading the transition toward clean energy solutions. As governments push for net zero carbon emissions, NextEra stands to benefit from huge investments in renewable infrastructure. The company operates regulated utilities out in Florida, providing stable revenue while also expanding its renewable energy projects. Financially, NextEra has delivered in strong revenue and dividend growth, making it a solid income-generating stock. The biggest risk for NextEra is interest rate sensitivity. Since renewable energy projects require heavy investments, higher borrowing costs could impact growth. However, with long-term government incentives, supporting clean energy and rising demand for renewables, NextEra remains a top renewable energy stock. Make these for the future. Segment 6. Stock pick number 6. Johnson & Johnson. When it comes to stable, recession-proof investments, Johnson & Johnson, J&J, stands out as a top healthcare stock. Johnson & Johnson is a global leader in pharmaceuticals, medical devices, and consumer health products. It owns well-known brands like Tylenol, Band-Aid, Neutrogena, and Listerine, but its real strength lies in its pharmaceutical and medical device divisions. One of the biggest reasons to invest in Johnson & Johnson is its consistent revenue growth and strong dividend history. It has increased its dividend for over 60 consecutive years, making it a reliable dividend aristocrat. J&J's pharmaceutical division focuses on cutting-edge treatments for diseases like cancer, immunology, and neuroscience. It continues to develop blockbuster drugs, ensuring long-term profitability. The company is also expanding its medical device segment, which benefits from an aging global population and increasing demand for healthcare services. Risks for Johnson & Johnson include lawsuits related to past products and regulatory challenges in the healthcare industry. However, its diversified business model, strong cash flow, and recession-proof nature make it a top stock for conservative investors. Segment 7. Stock pick number 7. Tesla. If you're looking for a high-growth stock, Tesla, TSLA, remains one of the most exciting opportunities in the market. Tesla isn't just an electric vehicle (EV) company. It's an energy and AI powerhouse. While its EV sales drive most of its revenue, Tesla is also investing heavily in autonomous driving, energy storage, and AI-powered robotics. One of Tesla's biggest strengths is its vertical integration. Unlike traditional automakers, Tesla controls everything from battery production to software development, giving it a huge competitive edge. Tesla's full self-driving FSD technology is another potential game-changer. If Tesla perfects autonomous driving, it could unlock an entirely new revenue stream through robotaxis and AI-powered mobility services. Tesla is also expanding into the renewable energy sector with its solar panels and battery storage solutions, which could become a major growth driver in the future. The biggest risks for Tesla include competition from other EV manufacturers, supply chain challenges, and valuation concerns. Tesla's stock price is highly volatile. However, for long-term investors who believe in EV dominance, AI, and sustainable energy, Tesla remains a top stock pick. Segment 8. Stock pick number 8. Nvidia. Another must-have growth stock in today's market is Nvidia, NVDA. Nvidia is a leading semiconductor company, best known for its graphics processing units, GPUs, which power gaming, artificial intelligence, and data centers. AI is Nvidia's biggest growth driver. The company dominates the AI chip market, supplying GPUs for machine learning, cloud computing, and AI-driven applications. Companies like Google, Microsoft, and Tesla rely on Nvidia's powerful AI chips. Nvidia is also expanding into autonomous vehicles, data centers, and the metaverse, creating multiple revenue streams beyond just gaming. Financially, Nvidia has skyrocketing revenue growth, high profit margins, and strong industry leadership. However, investors should be aware of semiconductor market cycles, potential overvaluation, and competition from AMD and Intel. That said, with the AI boom still in its early stages, Nvidia remains a top stock to buy for long-term tech investors. Segment 9. Stock pick number 9. Visa. For those looking for a safer blue-chip investment, Visa V is a great long-term stock. Visa is the largest payment processing company in the world, facilitating billions of transactions daily. It benefits from the global shift to digital payments, and its strong brand and network effect make it incredibly difficult for competitors to catch up. One of Visa's biggest advantages is its high profit margins. Because Visa doesn't issue credit cards itself, it avoids the risks of defaults while collecting fees on every transaction. Visa is also expanding into cryptocurrency and digital finance, ensuring it stays ahead of financial technology trends. Risks for Visa include regulatory challenges and competition from fintech companies like PayPal and Square. However, with cashless payments growing worldwide, Visa remains a stable, growth-oriented investment. Segment 10. Stock pick number 10. UnitedHealth Group. The final stock on our list is UnitedHealth Group, UNH, the largest healthcare company in the U.S. UnitedHealth operates health insurance plans through UnitedHealthcare and provides healthcare technology services through its Optum division. One of UnitedHealth's biggest strengths is its consistent revenue growth. The demand for healthcare services is recession-proof, meaning UnitedHealth can continue to thrive regardless of economic conditions. UnitedHealth is also expanding into telehealth and data-driven healthcare solutions, positioning itself for future growth in the digital health space. The main risks for UnitedHealth include government regulations and potential policy changes that could impact the healthcare industry. However, as a leader in health insurance and medical technology, UnitedHealth is a strong, long-term stock for investors looking for stability and growth. Conclusion. The stock market is filled with opportunities, but choosing the right stocks is key to building long-term wealth. In this video, we covered 10 of the best stocks to buy right now, including high-growth tech companies, dividend-paying blue chips, and stable healthcare investments. Which of these stocks do you think has the most potential? Let us know in the comments below. If you found this video helpful, make sure to like, subscribe, and turn on notifications so you never miss our latest investing insights. Thanks for watching and happy investing. Blast off!